Welcome back to ASX Market Watch and charting trend signals around the world. Guys, thank you so much for joining me today. It's going to be a quick one just because not a lot has changed in the markets, and you know, we're not going to try to create something that's not there. The trend is still down. It's not rocket science in any way, shape or form. However, there is one really big thing that I really want to talk to you about today, and that is there was one pillar in every market that was basically holding that market up. In the US, it was the technology sector, the NASDAQ. In Australia, it's the materials sector. And I just want to show you exactly what's happening to those last pillars that were actually giving one last bit of strength to the markets. This is just going to be awesome. It's absolutely fantastic. You will absolutely love it, I promise. Next, first of all, though, we will jump straight into the All Ordinaries. And again, I just want to give you a catch-up from where the market has gone since our first signal. We got our first downtrend signal at around about 4,740. Approximately. The market is now floating around the 4,000 level. So guys, we're looking at about a 15% drop since we got our first signal. We got another signal, just for the record, around here at about 4,500. And again, that's probably about a 10% drop, what we're looking at the moment. So guys, the trend, like when you follow the trend, basically it pays not to trade against it, just because the flow of money at the moment, as you can see, tends to be heading down. One thing to be really wary of on the All Ordinaries is this single bar right here. That single bar, if you can see it, it just closes, it starts well on its highs, and then it closes well on its highs as well, but it goes down throughout the day. There we are, just enlarged a little bit. And so all that means is that there is going to be a lot of strength around that level, and as you can see, for the next 2 months after that signal, that was in August, then the market has continued to stay and just float above that level because people will support it at that level. But there's one last thing on the Australian market that I want to show you, and that's the materials sector, which the materials sector was holding up. It was basically holding up the market. It was outperforming the All Ordinaries by about 10% at our last check-in, which was about a week ago. And basically, I just want to show you what has happened since then. So looking at the performance of the materials sector, which is the red line, against the All Ordinaries, which is the blue line. Now that, as you can see, the red line used to be well up here around the 10 to 12% mark, and now in the last week it has literally, it is literally right on the All Ordinaries, and it's threatening to fall below the performance of the All Ordinaries over the last year. So what that means is material stocks are starting to fall, and obviously you should be at the forefront of that if you're following the trend of those individual stocks. However, just looking at the overall sector, we can see now that that sector is no longer a strong sector. In fact, it's showing a lot of weakness, basically, and there's a lot of money flowing out of that sector, at least according to the trend. So just thought I'd show you that, guys, because it's a bit of fun, and it shows you exactly what's happening. It's basically one of the last pillars on the All Ordinaries to fall, consumer discretionary being the first of the pillars to fall. As you probably know, retailing was getting hammered big time. That again is not rocket science. We saw that way back in sort of March, April, May, and May especially, when we first called the downtrend. So that is the All Ordinaries. Pretty simple, huh? Pretty easy, guys. The next up is the Dow Jones, and basically the same thing on the Dow Jones. Just really wanted to say, since we called the downtrend on the Dow Jones, the market's fallen about 5%, so not as much. But this is what people are saying. They're saying that the big stocks, like the stocks in the Dow Jones, are now starting to show weakness, basically, and it's starting to get people a little bit scared. Now, obviously, all we can do is follow the trend. Now, if the market closes above this trend line, which is what we're looking for, around about 11,700. That would be a reversal of the trend, at least, you know, in the short term. In the meantime, the trend remains down, guys, and there is a lot of resistance there. We've got the downtrend resistance. We've got the this peak resistance as well. So just be very wary if you're trading against the trend. Basically, the trend is still down on the Dow Jones. And looking at the NASDAQ, which is the technology sector, as you can see, it's following suit. So yes, we've got a lot of weakness there. And also, as you can see, What does this look like to you guys? We've pointed it out in pretty much every other market in the US. It's this, and in Europe actually as well. It's this flag formation, which basically it usually indicates more downward prices. And as you can see on the NASDAQ, it's actually, we've got this single bar which is closed on its lows. That typically indicates weakness. It means that the sellers have followed throughout the day. It means that they haven't given up. And yeah, basically that single bar indicates weakness, as well as this pattern which indicates weakness, as well as this trend which is down, which indicates weakness. So what do you think the market is indicating right now? Anyway, I know you guys get this. Dow Jones we've looked at. FTSE. Gee, does the FTSE look familiar to any other market? Oh my goodness, I think it might. It's really, really too simple, this stuff, isn't it, guys? Too easy. Downtrend. It's a line on a chart. It's just a line. So simple, and yet really it works wonders when you know how to use it and how to sort of apply it, which is, yeah, again, that's not hard either. But as you can see, we've got two little trend lines right here, and that is giving us our sideways pattern, which is a continuation pattern. The only thing on the FTSE, guys, is look at all these long tail bars. There's a lot of long tail bars right here. So there is someone buying at the 5,000 level. And in fact, if you look at about a year ago, where were we saying? Oh, okay, yeah, actually this is quite interesting. Because, yeah, and it really is a year ago, actually. So last year, actually, I remember saying this in the ASX Market Watchers. I was saying there is someone buying at the 5,000 level. And as you can see, look, 1, 2, 3, 4, 5, 6, 7 times they bought over that time before the market continued to rise. And now it's happening again. So basically there's still someone buying in at the 5,000 level, and it's a psychological number. It's a big fat round number. It's a number that people like to buy and sell at. So if it does cross below that, it will become a bit of a resistance. At least, you know, basically that's what's happened in the past. It's not going to happen 100% of the time, but that's the highest probability move, basically. That's basically the FTSE. Hope that makes sense. Still in a downtrend, but still just be wary of these bars. If we get a bar that closes well on its lows, down below here around 5,000, then that's going to be another sign of weakness for the FTSE. So really simple stuff. Just really quickly, maybe we'll check out Asia as well. The Hang Seng, where did we call a downtrend on the Hang Seng? Well, we called one way back there as well, 23,000. We also called a more recent one at approximately 21,000. The market has fallen about 15% on the Hang Seng since we called that, and it still remains in a downtrend. So there's really no signs of strength actually in Hong Kong. In Asia at the moment, so just be very wary of trading long. At least I would be. That's just my personal philosophy. I would not trade against the trend. Nikkei, really quickly, Nikkei, I mean, obviously, still in a downtrend as well. Where did we call? We called downtrend right here. We called an uptrend, short-term uptrend here. We called resistance here, but a new downtrend here. And the market has continued in the downtrend. And actually, if we look at that from a return point of view, or at least where the market's gone since that call. Where has the market gone? Well, it's fallen about 700 or 800 points. And so 800 points, well, we're looking at what? 7 or 8% basically. My maths is terrible if you can't tell. The only thing that I need you to be wary of on the Nikkei, this is on the Nikkei in Japan. See this wedge? This wedge is going. Yeah, it's what it is. Like this is like a wedge. This is like a triangle or a rectangle formation that you'd usually see, a flag formation that you'd usually see in a bull market. So usually you would see a bull market that would erupt to the upside there. Obviously, it's going to be short-lived because we've still got our resistance at the trend line level there, so at about 9,800. So just be really wary. We might see a short-term move up from there. And again, just because it's this downward flag in a downward market, what that means. Yeah, I don't know. You don't really see that very often at all, but you'll usually get a short-term move, and just be very wary that the market is still going to find resistance at 9,600, 9,800. And that is the world from a chartist's point of view, guys. Thank you so much for joining me. I hope that has made a little bit of sense, and I hope that has possibly helped you in some way, shape, or form. Follow the trend. It can be your friend. I know I hate that saying too, but hey, sometimes it does ring true. Anyway, have a great week, guys. I will see you next week. Happy trending. Until then, bye for now.